Hello everyone. Today I'm starting with a new topic that is budget and budgetary control. So let's just understand the meaning of a budget with the help of an example. We know that in every house or in every aspect we prepare a budget. If you want to do anything and if you have certain upcoming event, you always prepare a budget prior hand. You decide, you think about, you make the estimates that what all expenses are you going to incur, and accordingly you set a budget for yourself. And similarly, in many households also, your mothers must be preparing the budget for a month or so. So taking the simplest example of say any other home, for example, in the starting of a month, supposingly you decide that okay, in this month you are going to spend 5,000 on your petrol or diesel, and there would be expenditure for around 5,000 on the vegetables, and there are certain tuition fees to be paid which approximately is about 10,000, and any other expenses I categorize them as miscellaneous expenses as 15,000. So total expenditure you estimate that in a month you are going to incur is rupees 35,000. And suppose your father is having a salary income and he gets an income of rupees 50,000. Fine. So what is the total saving? Total saving is when you subtract these expenses from the income, so you get on to the saving. That means from the money which is incoming to your home, out of which you have done the expenditure, how much is saved. So 50,000 is coming as a part of income, out of which 35,000 are your estimated expenditure, and the estimated saving is rupees 15,000. So budget is nothing but a simple estimation of what all expenditure are you going to incur in the future, what all incomes will be there in the future, and what will be the estimated saving in the coming future. Now these expenditure or these, from where do you think these figures will get? You will get these figures on the base of your past experience. In the last month, how much was your expenditure? Maybe how much did you spend on petrol or diesel? How much was the vegetable expenditure? How much was the other expenditure? So on the basis of the past experience, you actually go on deciding upon the next month budget or the future budget. Okay. So budget is nothing but the estimate of expense, profit, income for the future, but based upon the previous period or expenditure or experience, sorry. So for example, government budget. So every year in the month of February, the budget is released for the entire country. There is what is happening there also. Our honorable finance minister comes with the budget that okay, in the coming year these probable expenditure we are going to incur, these are the probable areas from where we are going to from where we are going to have our revenues, and in so and so sector this and this much amount is going to be spent. Fine, that is a budget. So it is based upon the last or the previous experiences, and it is for the future. Okay. Now coming on to the meaning of budget. It is a simple meaning. It is a financial plan for a defined period of time, usually for a year, and it also include planned sales. Now this we are talking with respect of a business. Okay. So in the business, the person has to decide how much sales volume has to be there, how much revenue has to be there, how much units are to be produced, what will be the estimated expenditure, what will be the assets and liabilities, and how much will be the cash flow for the company. Okay, so this is the meaning of budget for the purpose of business. Now another term is budgetary control. Now it is not just that okay, we have prepared a budget and you don't have to look for it. Of course, when you fix a budget, then you have to see that are you actually going with respect to your budget or not. Okay, what all responsibilities you have given to another person, are they fulfilling it or not? How are you going to do it? How will you come to know that okay, the budget which you have prepared is actually good, or is it working in the right direction in which you wanted it to work? It is that you are going to compare the actual performance of what you actually planned. Your plan is a budget, okay, and what the actual performance is there, okay, and then you are going to compare the variances. Then it is known as a budgetary control. So budgetary control is a system of controlling cost which includes the preparation of budget, So first of all, there will be the preparation of budget. First of all, you're going to prepare a budget. Then coordinating the departments and establishing their responsibilities. So in that budget, whosoever department is responsible for taking up different responsibilities, those responsibilities will be given and will be coordinated also. Okay. And comparing the actual performance with the budgeted. So then you are going to compare the actual performance with what you have actually planned and acting upon the results to achieve maximum profitability. So obviously the last aim, the main aim of any business is to earn the profit. So whenever you are going to prepare a budget, the only reason for comparing is that you are going to minimize your cost and maximize your profit. Okay, so this is the meaning of budgetary control. Now, taking an example, suppose there is a business and it is preparing a budget in the year start. Obviously, whenever you are going to prepare a budget, you are going to prepare the budget in the start. And then you are going to establish that budget, and then at the end, you are going to see for the variances. Okay. So in the year start, the business decides that, okay, he wants to sell 1 lakh units in the entire year. He has decided his budget that in 1 year, I am going to sell 1 lakh units, okay, by the year end. And by the year end also he is going to compare the actual performance with the budgeted budget, with the budget. So budgeted units were 1 lakh units, okay, and by the year end he actually came to know that he was able to sell only 90,000 units. So by the year end he is going to compare that where did he go wrong, what were the reasons for variations, why he could not achieve his targeted units. His targeted units was 1 lakh units, but he actually could sell only 90,000 units. Okay, so he will try to find out various reasons. That was his product not of good quality? Was there any other other person in the market that is very competitive and he's selling the goods and people are not buying your goods? Maybe due to any change in the government policy. What were the reasons? And by taking care of those reasons, then in the next the person is going to improve. So this is the total. In this very example, you can see the meaning of budget as well as the meaning of budgetary control. Okay. Now, it is very important from the theory point of view to study the difference between budget and budgetary control. So budget is actually an estimate for a future period, and budgetary control is a system of achieving performance on the basis of budget. How are you going to achieve a performance? Okay. So budget is a part of planning. In the starting only you decide, you plan that in the 1 year what you are going to do. And budgetary control is linked with coordination and control. How the departments are being coordinated, how it is being controlled. Okay. Then budget is the estimation of revenue and cost for a period. How much do you estimate the business is going to have a revenue? How much the cost is the business is going to incur? Then budgetary control is a process where budgets are prepared at the accounting period to compare and analyze the actual results at the end of the accounting period. So budgetary control is nothing but the comparison of the actual budget which is prepared with the actual performance which the organization is doing. Okay. So there are other points also which you can easily read and which are very easy. Now next is types of budget. Now this is also very important from the theory point of view. Types of budget includes on the basis of capacity, on the basis of coverage, on the basis of period, and on the basis of conditions. When we talk of on the basis of capacity, so we have two different types of budget, that is fixed budget and flexible budget. On the basis of coverage, again we have two types, one is flexible, one is master. On the basis of period, then we have two types, that is long term and short term budget. On the basis of conditions, we have again two types, that is basic and current budget. So this is basically the type of budget, or you can also say it is a classification of budget. Okay. And from this chapter we actually have to cover two things, one is practical and one is theory. Okay, theory all I have covered in this PowerPoint presentation. Along with it, the practical related to fixed budget and flexible budget is very important. Okay, so let's move on. So first I am going to discuss on the basis of capacity. On the basis of capacity, we have two types of budget, that is fixed budget and flexible budget. Okay, now coming on to the first, that is fixed budget, and it is also known as the static static budget. Okay, so let's just focus on this very example. So in this example, it says that in the month of April, okay, you decide that you have a fuel expenditure of say rupees 5,000, then you have vegetable expenditure say rupees 5,000, and you have other miscellaneous expenditure say rupees 10,000. So you make an estimate that okay, in this year you are going to in this month you are going to have an expenditure of rupees 20,000. But by chance it happens that okay, guest arises at your home. So what happens is, and supposingly that person is not going somewhere, he is going to stay at your place, so there will be no change in the fuel expenditure, but certainly there will be the change in the vegetable expenditure and other miscellaneous expenditure. So your estimated total budget rises to rupees 27,000. So what is the scenario of fixed budget is that it says it has nothing to do with the change in the activity, or change in the level, or change in the capacity. It is going to assume the same figures only. Okay, it is a rigid kind of budget. It has nothing to do with what the things are changing. If it has decided that okay, the expenditure will be rupees 20,000, anyhow it has to be 20,000 only. It is not going to see for any change, it is not going to adjust itself. So fixed budget has been defined as a budget which is designed to remain unchanged irrespective of value of output or turnover achieved. So when I talk of capacity, capacity is related to whether you are using your business to 50% capacity or 80% capacity or 100% capacity. Okay. So supposingly if you are producing at 50% capacity 1500 units. So obviously at 60% or 80% capacity, your units needs to be higher up. Or you can take a very simple example. Supposingly you study for 4 hours a day and you happen to study two subjects in those 4 hours. Okay. Now you have increased your time. That means you have increased, say, from earlier you were studying 4 hours and now you are studying, say, 7 hours. So are you going to again study for just two subjects, or are you going to increase your capacity? Obviously, you are going to increase your capacity because you want to make the maximum utilization of time. But fixed budget says that even if I take 7 hours, I am going to fix to two subjects only. So it has no change, it has nothing to do with the change in the output or turnover. So it is a rigid budget and is drawn on the assumption that output and sales can be accurately estimated, or there will be no change in the budgeted level of activity. This is the fixed budget, also known as static budget. Second is flexible budget. Now taking the same example that you have fuel expenditure this much, vegetable 5,000, miscellaneous 10,000 and total 20,000. And guest arises. Okay, again he is not going anywhere, so you have more vegetable expenditure, more miscellaneous expenditure, and total 27,000 as total expenditure. So flexible budget is also known as sliding scale budget, which says that okay, we are going to change with the change in the level of output. Okay, so if any one more person has arrived at your place, so you are going to adjust with the expenditure. So you are going to be coordinated with that. So flexible budget is also known as variable budget, is a financial plan of estimated revenue and expenditure based upon current actual amount of output. This budget change with the change in the factors of output. Whatsoever, if your capacity is going to increase from 40 to 60 to 80 to 100, simultaneously your budget is going to increase. So flexible budget is a budget which by recognizing the difference between fixed, semi-variable and variable is designed to change in relation to activity attained. So when we talk of budget, we have two types of cost. One is fixed, one is flexible. Even in this example, you can see this fuel is a fixed expenditure. It has not changed. But these vegetable and miscellaneous expenditure are your semi-variable or variable expenditure, which change with the change in level of output. Okay, so till here I have covered meaning of budget and budgetary control, difference between them, and two types of budget, that is fixed and flexible budget. In the next video we'll discuss the other budget and also the practical portion of fixed and flexible budgets.